Good morning. Today is October 5th, Monday, 2015. Looking at the E-mini Ds contract on a monthly chart. Not a lot's changed, of course, since last week. Being a monthly chart, we are still an inside month within an inside month. So that going forward, let's remember that the high and low of September are going to be important levels when we get to them, where we might attract attention of other time frames. And second thing of note is that we are within reach of the monthly 20 moving average, which I have referenced as 1972, where we might encounter some dynamic resistance. So that'd be a place, if you're long, to take profits or maybe scalp a short, in my opinion. If we get above it, of course, that would be support. Now, the other thing that's going on here is, which is one for the bulls, is what is called a Tsuki down gap. Okay, and this candlestick pattern is actually a bearish continuation pattern, theoretically, but it's looking into it a little bit more, because this isn't one you see very often. It's actually, the statistics show it's more than 50% of the time, which is close to random, it is actually a bullish reversal pattern. So that's one for the bulls. Okay, so we're looking at support for the upside right now. All right, moving on to the weekly. Okay, now looking at a weekly chart, we are balancing. Actually, currently we're trading up here at 56, so this candle would extend, but we are balancing within the last 5 weeks, which fits with the inside month within an inside month. We are currently above the 100 weekly moving average, and which is bullish, and we also have a piercing line candlestick formation, which is going to be bullish. It's a bullish reversal. Okay, so this candle works about over 64% of the time, according to one candlestick researcher. So it's consistently works as a bullish reversal pattern. So that's one for the bulls. Okay, and moving on to the daily. I want to start on this chart because it's a lot cleaner than the chart I'm going to bring in here in a minute. In the daily, let's review here. We have, after the sell-off in August, we balanced and found a trading range. And once that trading range was primarily established, we had to look above and fail, and then we went down, tested the lows of the trading range, looked below and failed in the last week. Now we've entered the trading range. Friday we had another little look below, and the destination is going to be the upward part of this trading range. Now I've identified what I'm calling an inverted head and shoulders here, which may or may not be valid use of it, but we'll see what happens. I also, when I was talking about this with someone, they like the trend line to be here. So we're already above, we've already broken the neckline if you looked at it that way, or at least broken this trend line. And that's the important thing. It's not so much as the head and shoulders pattern as much as that this is a trend line that's broken. So this could be some, call it some throw over, and I would agree with that. But I'm going to leave it here for now because I want to see what happens, because we're already above it. And typically when we're above a line like this, we will test it again before we take off. I have a feeling if we got down to where it looks, okay, that looks like it would be around 1921.75, and if we were to get down there, and we'll talk about the profiles a little bit in a minute, if we were to get down to 21, well, actually this may still be able to be bullish. You know, we've got basically a spike from Friday, and we want to stay up within, we want to stay above 1725 to remain bullish. So I guess that would still fit. We could see a test down to the 21 level, maybe repair the POC at 20, or test the previous Thursday's high before we either rotate in here or continue further. So yeah, that could happen. I actually thought it was a little bit further down than that. So we need to keep above Thursday's high, in my opinion. However, it's important to remember the chart we're looking at is 24 hours. So the high on Thursday, which is right here at 29, this is including the overnight. So the actual pit session high is let's see what that was here. One moment. Where was that? One moment. 17 quarter. Okay. Okay, so 17 quarter would be about right here. All right, so yeah, so we're opening gap up if we stay up here within the next hour, which is likely because it's sort of it's about 10 handles above where we. Let's see. Sorry, let me just give me 1 second here. Where we closed on Friday was 43.75, and we're at 55.75. All right, 12 handles. That's even more likely that we're going to keep that, but of course anything can happen. So we've broken that neckline already if we consider this the trend line and this spike above throw over, which is completely valid. However, this still is a valid trend line as well, and that puts us at about 63 quarter. For breaking that, might see some explosiveness to the upside if we get above that, or we may already be experiencing sort of the pop to the upside, having broken the trend line here. Either way, I think that to just slowly lift up here to the upside, taking several days, is not as likely as the fact that we've already or are about to hit some kind of a popping point where there'll be stops, or there's a trend line that once we chew through it will accelerate if we don't fail there. Another thing that's important to note, I have this marked as Tuesday, October the 6th. This is a Fibonacci timeline, and this would mean that on this day or very close to this day we could see some significant activity. Now this may have already happened Friday. That's how this can work. I mean, it's not always exact, but I am aware of this, that something could happen this day, or it could happen on this is the 12th. This would be Monday. There could be, we could balance in here, and then we find our big move next, this coming Friday or next Monday or Tuesday on the 12th, around the 12th. Let me show you how this is formed. So I went from this high to this low, and this, you see where it says 34 right here, that's the timeline. You can see here on the 21st day we made this look above this high. You can see here on the 8th, this was the high, like where it tested and before it reversed. Here's where it reversed on the 13th. So these are what can I say? You either understand it and believe in it, or you don't. So I think the proof is in the pudding. It works. How it works is subject to great conversation, but I pay attention to it because it's there. All right. Okay. So moving on to the next daily chart. Okay, this daily chart's a lot more maybe difficult to get a hold of what I might be talking about here, but what I want to point out is, we were one time framing up off the lows, off this look outside of balance. This is the pit session, and we stopped one time framing on Friday. We had a little bit of a gap down. We went lower and we came back up, repaired the gap, and then the route was underway. So we've re-entered the balance area, and it accelerated to the upside, took out Thursday's high. We found our way through these volume balance areas, and that's the dark gray areas. You can see the volume on the right, these big areas, so balance areas. So we looked above those and accelerated. We got through the 20 moving average. We're through the 100 moving average weekly. We talked about that already. And now currently the overnight, which consolidated by the time I went to bed last night, it had consolidated in this upper distribution. It is broken to the upside with trading in Europe and Asia. And we are currently at 56.50 inside this volume balance area. Now this volume balance area covers all the volume going back through these days, but what I want to look at is immediately, of course, this is a balance area in itself. Now I know this is probably chaotic looking to you, but to me, I'm used to it. The sort of slate gray behind the darker, I made the balance area one based on the TPOs and one based on the volume, and I've sort of filled in the edges where the time is the slate, because there's not as much volume, but there was time there, and the volume is this bigger area, and that just tells me, if there is some hang-ups here, what's going on. Okay, like if we were to come up here and stop, or it may be an area to play off or take profits from, for example. Okay, so right now I'm looking at, we've got the gap in play, but we're also in this 2-day balance. So I think this is, it's a big range, but it's something to keep an eye on, that we're sort of in this balance area. So this little balance area actually could be a place that our destination is to the high of this balance area. Ultimately, it's to the top of this balance area. But we take things one step at a time. This is at 69.25, and that would put us in this volume balance area, which would push us up even higher, and that's above this trend line. So there's different ways to look at this as well. I showed you on the other chart. So I could move this trend line to here, and we're above that. If we tested down, even down to here, if we stay above Thursday's high, we are still bullish, and that would put us into tomorrow, possibly one time framing higher. Tomorrow is the 34th Fibonacci day. Anyway, right now, basically gap rules are in play, but also balance rules for me. That's how I'm looking at this. I want to see if we get a look below balance at either 52 or 51.25 and fail and come back into balance. That's a potential long for me. That's a go with the gap situation. We could come down to, let's say, 47.75 in a test or an attempt to close the gap and bounce from there. These are levels that I will try to keep an eye on, make decisions based upon, because there's a lot of information in that. So anyway, in the bigger picture, the destination is any one of these balance area highs. Here, here, the low here. Let's see. Here, high here, up here on the blue. Any one of those. The downside could be anything below where we're trading now. It could be the bottom of these balance areas, the top, like it could be previous high day, Friday. It could be the weekly moving average down here, which coincides with the overnight low, and the bottom of this volume / time balance area. You can see the volume over here. It's just a huge ledge. Could be there. Could be all the way down to the weekly pivot point, and that brings us to another point. Let me look at the weekly pivot points. I forgot to put those on. Now we're higher, so we need to let's see where we are in the R1. All right, that's an important level to have on the chart. Okay, don't need that one. All right, so we have the R1 at 59.75, so that's a weekly R1, so that's an important level. Let me put on the daily pivots. Okay, we've got an R1 on the daily up here at 63.25, which was another level that we had mentioned. Where were we talking about that? Just a moment. Okay, I think in the weekly chart we were looking at this volume high at 62.25, so it's right in there. So that's an area right in this whole region. We could find some consolidation or find rejection. There's resistance up in here. So if we were to test lower and accelerate, we could find our highs today up in here before we turn around. So we'll see what happens. But gap rules are in play. If the gap's not filled relatively quickly, then we go with all gaps. If we can't get value to unchanged, then later in the morning or in the afternoon, we can expect a rally. Meaning, if we test down into yesterday's range, we really can't get acceptance and get value overlapping, or to unchanged. Well, it's unlikely we'll get unchanged. If value was to match the value area from Friday, it would be a massive day. But if we can't get our value inside or overlapping to Friday's value, we can expect a later rally. I mean, I think the odds on favorite is that if we stay within, let me pull the profile in here. All right, let me shrink it down for a minute. Let's just take a look at this. So huge day. We have, I don't think this is a great low, and we have terrible structure. We've got 1, 2, 3, 4, 5, 6 distributions, anomalies, and everything. So if we were to get down in here, I think we'd want to stay within this upper distribution. So once we get down into, if we close the gap and we get into this area, I would say spike rules are in play, and it's a balance of the spike. There's a spike base here at 2675-ish, and we need to get below that spike, or that's, we're likely to rally based on the the gap rules, but also the fact that we combined with that, if we looked above the previous high day again, I would expect to take off out of there. Again, even if we got down here to the POC and repaired it, unless we can get back into this couple-day balance, these 2 days, which would be Thursday and Wednesday, unless we can get back in there, forget about it. We're going higher, in my opinion. So again, anything can happen. We'll take it as it comes. So that is the pre-market from me. Thanks a lot.